Good afternoon. This is Tom Aspray with the Viper Report. It's Tuesday, November 9th. Hope you're having a good month so far. In today's presentation, I'd like to talk about market analysis and why it is something that you should pursue if you would like financial independence, retire early, and do better in your stock portfolio. This chart shows some of my columns from Forbes since August. Kind of show you what my thinking has been. This one was from the latter part of August. There was a survey, the Bank of America survey. I'll show you some clips from that a little bit later. It showed that managers were getting nervous. The global managers were cutting back. That to me was a good thing, because that suggested we were getting closer rather to the market correction I've been expecting as we got into August. By early part of September, the technical outlook for the market, in my view, had gotten much worse, but there was no fear from investors. Nobody was looking for a correction in the financial media. Of course, we got a sharp drop on this Monday. We had a rebound back. CNBC are going like, okay, yeah, that was the pullback's over. That was the dip to buy, and we're off to the races again. I was saying, my work was saying, no, it's too early yet. We have not done on the downside. Correction over. Still a mixed market. By early October, things had gotten much better. In my monthly scan of stocks, I had one stock I really liked, even though September had been a rough month. And then a week or so later, the evidence was really strong that the correction was indeed over, and this was the buying opportunity I've been looking for the last couple of months. We've had a straight up move here. I did not anticipate we'd be whatever it is, 16 out of 18 positive closes. But in last weekend's stock, I made the case of why the market was likely due for a pause or a consolidation. When I add my Stark bands to this, you can see the reason. We'd been bumping up into the Stark bands for the last 3 days of last week. And, it's always, we had a very marginally higher close on Friday. And, it was sort of, you can see how all the Stark bands, right down here, remember at the lower part of those bands, high risk time to sell, low risk time to buy. Up near the upper bands, high risk time to buy. So we've been in a high risk time to buy for the last several days, and that made it seem like a correction was very likely in my view. I've been doing this for decades, and I've been through periods where investors either want to buy anything and they don't care or don't want to understand about the market, and on the other hand, I've been through periods where people don't want to be in the stock market at all and have no interest, and they just throw up their hands. You can see right now the Dow's down 180, S&P is down 21. Both have been worse. You can see by this intraday chart. Advanced decline numbers, not really too bad. One of the things I've been worried about last week in my video was the high-low analysis. It has gotten a lot better in the past week, so it's positive again, so that's not a concern. I don't look for this correction to last too long, and probably going to be another buying opportunity. There's been lots of good stocks to buy. The market averages, the risk control, has been difficult. Fleur is probably my best trade of the past month or two at least. And you can see I've got long, right around 1635. I had a couple of entries here, one up in here, one down there. We got up to the monthly pivot, the R2 here, this arrow, and took a 12% profit on it. I often try to do that. By what happened to the stock, you can say, well, that was stupid. You should have held on to it. But it's just a matter of money management. So if you, if you bought 100 shares at 1635, your cost basis went down dramatically when you sold half. We exited that last Friday before the close. We put out an action alert about 3:20 on Friday afternoon. It got a little higher, and now it's back below where we got out, so we're fine with that. But it was a great banner profit, and you can see the technical studies down below. We're clearly positive as we came down here. We're getting right by the pivot. I'm going to be doing a course in the next week and a half or so, and I'll have something in the email. Send in your questions, what you'd like me to talk about. Another stock that was featured in Forbes is a monthly pick. It was Salesforce, a really nice technical pattern. We got right up here. You can see we made it up to the upper trading channel, up to the Stark bands. Got a pullback here right down towards the pivot. You've seen my videos. That's kind of what I teach. But look at the RS. This shows how it's a leader leading the S&P. It had broken out, so it got a little pullback here, and it's actually doing pretty good. It's only down slightly today. OBV is also positive. So we have some profit-taking orders, not too far above, kind of below the R2. And, looking at this channel width here, you can say that, okay, well, 23 points up from there is about, 309. So we've at that target. In the ETF space, even though I was expecting that correction, I noticed by the latter part of September that XLY, conventional wisdom, if you think about what people were saying about in late September about Christmas shopping, the supply shortages, nobody has anything to buy, everyone was pretty negative on retail, etc., and holiday shopping. But XLY looked good technically. I couldn't explain it, but you can see the RS here broke out, and then the OBV broke out. So we recommended right around 81.35. Once again, we took half off here, on this day up here for a quick profit. Annualized would have been about, would have been incredible. We're still holding on to the other half. On as of Friday's close, you can see we formed a doji up here. I think this pullback is going to be a buying opportunity, but I told on Monday morning to subscribers, I said, hey, if you're an option owner, we had the craziness about Tesla, and Musk's Twitter account, whether he should sell the stock. That's what's put pressure on XLY this week because Tesla's down sharply. So it pays off to understand the market. In last week's column for Forbes, Market Pros Fighting the Trend, I mentioned that over $51 billion was conducted in Tesla options last week. And with the Tesla down, I don't know how much percent today, a lot of those people just lost that money. So it's gotten a little frothy up in here, but I think this is going to be a buying opportunity. And there's some stocks I'm looking for to buy stocks. It's all about risk. And I try to avoid the risk. Here's an XME. It was an ETF I really liked. It had this breakout. We were already long from right around here, I guess 43.80 or so. Broke out, but then it reversed. I didn't like this action right in here. You can see that the RS, didn't break out. The OBV did. So I sold half the position for like a 0.2% loss. We're still holding half the position. Now it's looking pretty good. But that's what I try to do if I think, okay, well, hey, this looks like vulnerable to losing 3 or 4%. I'll try to bail out of it. This table's from the Viper Hot Stocks report, our current stock positions as of last Friday's close. We showing the closed out the position in Fleur, and pretty much what we give our clients, every issue. Issues come out twice a week generally with special updates, and I'm pretty responsive to questions that both the subscribers and those of you who are just on the Viper Report email list send me. In last weekend's Forbes article, I talked about the B of A survey. It was out of a Bloomberg issue. You can probably search B of A survey. Pretty interesting. They were the most negative on the bond market that they've been for quite some time. They're convinced rates are going to move higher, which is, of course, negative for bonds. Right now, they're moving lower. So hedge funds are getting hurt a little bit, I think, in that move. Also interesting, the fact that their outlook, has really dropped in terms of this blue line is the percentage expecting stronger economic activity. That's really come down. So they're worried about China. So if you know where to look, and I try to teach you that I think will be helpful in the long term for most of you. As I said, I will be doing an in-depth training session. I'll try to do at least one of those a month. So I appreciate your feedback on those, what you want to learn, what questions you have. So send those in. There's be a comment in the email. It includes the video. And of course, if you want specific advice, we'd love to have you become a subscriber to either the Viper ETF or the Viper Hot Stocks report, $34.95 a month. You're in charge of your own subscription. And as I said, most of the Forbes articles show up in the Viper report after a week or so. So with the pay portal on Forbes, you can see what I'm thinking then, even though it's a week late. So hope the rest of your week goes great, and thank you for tuning in.